Oh man, so Algorand is down about 12%. We're sitting at $1.75. But what happened? Why do we have this massive candle wick down? Let's take a look to find out what we can see in the charts. So we can see here we were having this a good movement here on Algorand. You saw we made the video yesterday. We had a good bounce off the EMA ribbon, as you can see here, and we were holding this EMA ribbon. And I actually, off the video, I drew this head and shoulders pattern in purple, which you can see. We kind of created this bit of a head and shoulders pattern here, with this being the head, this is being the second shoulder. We kind of broke through, and this had a price target of about $2.30, right? Which would have cleared our previous resistance here of $2.20. And we broke down. But why did we break down? What's happened here? So you can see we kind of had a fake out. We broke back up, and there's always a risk of a fake out. That's why whenever you're trading these, you want to get it on the retest, right? It's very important. When you get a breakout move, you don't want to catch it here. So as you see, you want to wait for it to bounce, test your resistance or support, and then go back up, okay? So in this case, testing your support and bounce back up. You want to buy here when you're trading, okay? This is the bit you want to buy at here. You don't want to buy at the other points. So back to the point, what created this fake out and then this sudden wick down, which has flipped us back bearish on the hourly? And if you look at the 4-hourly chart, we've got the same wick as well, okay? So you can see here, we've got the same wick, and it's completely uncharacteristic and just flipped us bearish on there. And on the daily as well, it's a really big wick, but we're still bullish on the daily, which I'll come to on in a second. But what caused this wick? It's not just Algorand. You can see we've had a heavy wick down on Bitcoin, sitting at 42 from 45 level. We touched the 45 level, everything was going positive, and we've ticked that back down onto the 42. Let's look at Ethereum. Same thing. If I go to the hourly chart, you'll be able to see this exact same situation play out. So if I zoom out here on the hourly chart, you can see I had a similar head and shoulders pattern here for Ethereum, and we've had this massive wick down. Okay, let's look at Cardano. Exactly, same again, massive wick down. So we know it's a macro issue. This is always what we need to understand when we're trading or we're investing in any of these coins. What is the issue? What caused it? When you can see it happening to the broader crypto market, we know it's a macro issue. Then we can dig a little further to find out what it is. Now, in this instance, it's not just a macro crypto issue. We know that this is an issue for the wider global markets. Okay, we know this is an issue for the wider global markets because we can see that the FTSE was down, the Hong Kong index was down, and the S&P futures are also down. Now, this is based on the Evergrande crisis and the fact that now investors are becoming scared again from the contagion. We've had a U-turn. The market's been yo-yoing. Monday, Tuesday was very scared. Late Tuesday, kind of Wednesday, they were feeling a bit buoyant and that the worst of it was over. Now they've realized that Thursday, yesterday, Evergrande missed an important debt repayment on their coupon, and they went quiet. They didn't communicate. Nobody knows what their plan is. And people are now getting worried that we're edging closer to a default on Evergrande and therefore the wider contagion risk. Okay, so let's go back into the charts to see where we stand with this. So if I go back to the algo chart, you'll be able to see that we've actually started ticking back up here on this level. So it's created a bit of a support around the $1.72 mark. And we've seen a green candle there, which is quite reassuring here. They've got this green candle trying to bite people buying the dip here on this. Now you want to see it get above $1.79 because that's our known resistance turn support. So we've got to get above this. We don't want to be triggered back down here from here because that could set up a longer term bear sort of situation. But on this instance, we can see we want to see a 4-hourly candle wick back up and just recover back to where we were. Let's look at the wider market because we know a lot of these are going to be triggered. Algorand and these kind of altcoins will be triggered by the wider market. And at the moment, you can see on the hourly, we can see that Bitcoin's not managed to tick back up yet. Okay, so where we saw Algorand bounce back, Bitcoin's not managed yet. And they're stuck between two kind of support resistance levels in between here. So we're in a bit of a no man's land. You can easily get back up to here, or you can easily come back down to here. There's no support in this area here. Looking at Ethereum, same situation, gone for its support level there at 2,900, sitting at 2,849. Not looking good for Ethereum as well. So we're bearish on all of these situations, and even on the daily chart, that massive candle flips you bearish which is not great for the overall crypto market when you've been working really hard to build some momentum. But these macro issues are going to be weighing on confidence for a while, and they're not going to go away. So as investors, we need to, and you always see me doing this, I will do technical analysis, but I will try my best to marry up that technical analysis to fundamental issues. Anybody who tells you that a cryptocurrency is going to go up because of a head and shoulders pattern or an Elliott wave or any other piece of technical analysis they've managed to do is not really being genuine, right? Because we know the market is more than that. You can set up the perfect head and shoulders pattern. Let's show you that again. You can set up the perfect head and shoulders pattern. Let's go back into Algorand. Let me go back into the hourly. You can set up a nice trading pattern as we have in purple there. We set our price target all the way up there at $2.30, and you need to be prepared for it to move in that direction. This is what an astute trader and investor will do. You'll be prepared for it to move into that direction, but at the same time, you set your, if you're trading this, you set your stops for your levels below your resistance. So in this situation, you'll be setting your stops at about $1.97 is a sensible level. You can give yourself a bit more room coming down if you want, depending on your risk aversion, to $1.90, okay? Because you don't want to be caught in this movement, because the wider macroeconomic conditions will take precedence over your chart patterns, right? That's just how it is. So you can draw these patterns as much as you like, but what's more important is you getting the convergence between macroeconomic situations and fundamentals and your technicals. And I always will be a big proponent of that. Anybody who says, oh, it's just based on chart patterns, that's not true in itself, because chart patterns are created by fundamental topics, right? Why do you get these head and shoulders pattern? What does it mean? There's psychology behind this. And if you want me to explain this in more detail in a video, comment below. But this is a psychology, right? These are the reason the head and shoulders pattern works is this. You can see that you have a situation where you get rejected. The price goes lower, right? At this point, the buyers go, hang on a second, it's not getting cheaper than this, mate. We're going to buy it back up. At this point, the seller goes, oh, hell no, back down. But then the buyers go, no, we're buying. And that's why the head is lower than the first shoulder, right? And then the story carries on. And that's how you know there's a fundamental argument going on between buyers and sellers. And that's what technical analysis is. It's not just a fact of drawing patterns. It's about understanding, what do these candles mean? What are they telling me about the price point moving forward? And in this situation, I mean, even on a small level here on this hourly candle, what's the story, right? The sellers have said, we're sending you back down to $1.72. But the buyers are saying, hang on a second, we're not having that. We're trying to push the price back up. And they've pushed it back up onto this wick at $1.80. And then sellers have pushed it back down to $1.75. And this is what happens in the market. You get your buyers, your sellers fighting each other, right? Imagine them coming to a head and arguing what the price is. That then forms patterns, which gives you your technical analysis. Okay, so where are we going to head on here from Algorand? So the good news for Algorand is we didn't need to go all the way down to our next kind of support, right? So we didn't test these levels here on $1.50. We've turned around here on $1.70. I wouldn't be surprised if we do come down to test this level at $1.64. We have to be prepared for that as well, because we could easily test that level. This green line here is at $1.64. But at the same time, we could easily head above $1.79 and build some support around this level, which would be the bullish case here. Okay, but clearly, even on this hourly candle, we are bearish. On the 4-hourly candle, we have technically flipped bearish, although we can easily see buy the dip happen and this recover around support levels. Again, it's going to be dependent on the wider market. Bitcoin's got to move for all coins to be able to follow it. The wider market has to improve. The S&P is going to open up in a couple of hours here. The futures are actually trading down as of now. So we can see here, you've got the S&P down 0.38 futures. You've got 0.31 in the Dow, 0.5 on the NASDAQ. So not looking too positive given the Evergrande crisis. But overall, nothing fundamentally has changed in these coins. So no need to panic if you hold any of these coins for a long term. But if you're trading, just be cognizant of the different points and resistances, and just understand that, look, anytime you're trading, you've got to be really careful, because this can happen at any given time. And it doesn't mean you're a bad trader, because your patterns could be set up perfectly, your rationale could be set up perfectly, but macroeconomic conditions will always prevail over your chart analysis. That's why you need to have stop losses, because even the best traders are wrong a certain percentage of the time. You just need to have more winners than you have losers, and you need to manage your risk on your losses. Anyway, guys, hope you found this useful. If you want to see more videos like this doing technical analysis on any of your favorite coins, please don't forget to like the video so I know that, and comment below which coins you want me to do more analysis on. I know we got a lot of people watching for Algorand, so I try to spend a lot of time on Algorand, but there are a lot of other amazing projects. If you want to spend more time looking at any of those or doing any technical or fundamental analysis on any of those, comment below and we can get those videos created for you guys. Hope you enjoyed. Trade safely, invest safely, and I'll see you in the next one.